Great to have you on today. You are firmly in the camp that says the BOJ is going to end its ultra-loose policy this week. So walk me through the rationale and why now is the right time.
Yes, definitely. So it's a very exciting result, that 5.28% preliminary figure coming out of the 2024 shunto wage negotiations. Now, we're expecting that the Bank of Japan will actually do away with negative interest rates, and they'll announce that tomorrow. And the rationale for that is that the Bank of Japan has been very transparent, or as transparent as they can be, that they want to move away from negative interest rates. And they've clearly flagged that if they get a strong shunto, then they will do that. And this shunto has been an upside surprise, however you slice it. So I think, this is all the information they need to go forward and move forward with no longer having a short-term negative interest rate.
I think the story in the Nikkei almost seals the deal as well. Of course, we'll have to wait and see exactly what happens, but it seems as if the BOJ have been aligning markets and expectations towards a move. So if this does happen, it's going to be the first rate hike since February of 2007. How do you expect these stronger wage gains and the first rate hike to translate into the economy?
Oh, I think that's the million-dollar question at the moment, and that's the thing that we will be watching extremely closely, because it's one thing, we've got a strong preliminary figure with these wage negotiations, but at the same time we need to see how that translates and also manifests throughout the economy. And I think there's some really important things to unpack here. First of all, we actually don't know how households are going to respond to these stronger wage gains. I mean, it might not be an exuberant response, so that's one thing. And we also need to keep in mind that these preliminary wage figures don't actually capture the small to medium-sized enterprises. So that's, representing about 70% of workers in Japan. And we do know that these SMEs don't have the same sort of pricing power when it comes to passing on higher input costs. And they also then don't have the same, power when it comes to pushing through these outsized wage negotiations that we've seen from the bigger players in the market. So we do know that, not everyone will be experiencing these, strong wage gains with a 5% handle to it. So that's something to keep in mind as well.
So, Katrina, what does that mean? Does it mean that the BOJ could potentially be one and done here in terms of policy response moving forward?
Yeah, it's an interesting one, because I think what we're looking at is we're not going to see much more than a symbolic shift when it comes to the policy environment in Japan. We're looking at the short-term rate going from about, negative 0.1 to about 1, maybe it'll be around 0.5 by the end of the year, but not a meaningful change, because if we're looking at the current macro backdrop in Japan, it doesn't support much more of an aggressive monetary policy move than that. And, if we're looking more broadly, we're seeing consumption is still weak. Sure, it might get a lift, but there's a big question of how much of a lift it's going to get with this policy shift. And then if we're looking at other areas of the economy, I mean, private investment, it's not incredibly strong. And we're also seeing that the export environment is kind of treading water as well. I mean, overall, we're expecting Japan's GDP growth this year to come in at around 0.2%. So it's not incredibly strong. And that's not supportive of an aggressive move from the Bank of Japan, unfortunately.
Yeah, exactly. I mean, just looking at our wall right now, you can see Japan's GDP from a quarter-on-quarter perspective still looking relatively muted. So there is growth needed in order to sustain higher rates. But Katrina, moving forward, I guess the question for investors here is, what does all of this mean for Japanese risk assets? What do you think? Are they priced for an exit at this point? We're seeing this 2.5% pop today. Japan has really been a trade du jour through the course of the year. What does that tell us about how investors are thinking about this potential hike?
Yeah, I don't think it's going to be a game changer at this point. I think a lot of it's already priced in. Bank of Japan's been very good and very clear with its communication about where it wants to go with monetary policy. And so I don't think we're going to see meaningful change. I mean, we have seen a lot of outflows from Japan over the past decade because yields overseas have been much more attractive than at home. I don't see that changing at this point, particularly because the short-term policy rate isn't actually going to be moving that meaningfully. globally. So, that's something to keep in mind as well. I mean, it's more of a symbolic shift, we would think, at this point, rather than it being a game changer. And I think what we need to keep in mind is that while Bank of Japan is stepping away from its ultra accommodative stance, at the end of the day, this policy that they're putting forward is still accommodative, it's still supportive, it's just less so. So, that's why we're not thinking that it's much more than a symbolic change, an incredibly important, but still a symbolic change at this point.